GPIQ, the Goldman Sachs Nasdaq-100 Premium Income ETF, the new king of income from Nasdaq? Well, that's the question. We're going to break it all down today to you. Welcome back to the channel. I'm Doug, the Retirement Guy, with all your monthly ETFs. We've been taking a look at the Nasdaq-100 to find out which is the best fund for retirement accounts, which is the best fund to invest into, and we got all the information tied into each and every fund. Today we're going to break down GPIQ. No, I'm not bored in the picture. I am really the guy who sits there and studies the computer and studies the different charts and everything. My wife says I spend way too much time on the computer, but it's what I enjoy doing. So I'm not bored. I'm just in a deep thought into it. So anyone wants to say I'm bored? Go ahead, do what you want. Leave a comment down below. But we're going to break it all down for you today. So before we do, I got to do a shout out to all of our subscribers. Thank you so much for being part of our family. Also, the Patreon supporters, thank you. This is what keeps the channel floating, keeps it rolling, keeps the information going forward. All I ask, if you can, go down in the description, hit that Patreon button, and join. I have a section for free. I have a section for just a small little monthly donation, or you can just make a one-time donation. It just keeps the channel growing, keeps to be able to buy the different subscriptions that we need and do accordingly. So if you can help, great. If not, I still love you, still keep you here. So best of all, don't be afraid, hit that subscribe button. Like I said, join the 13,000 that we have out there, and also most importantly, hit that like button. Let's get into today's video. We do have to do the disclaimer, and that is past performances don't guarantee your future results, and this information in this video is for educational and informational purposes only. I am not a licensed financial advisor. I am just one who's been studying this stuff for years. The example and suggestions discussed here are basically not suitable for all individual situations, so always contact a financial advisor before making financial decisions. So the Goldman Sachs Nasdaq-100 Premium Income ETF, better known as GPIQ. This fund is an actively managed ETF, and it primarily involves stocks within the Nasdaq-100. It's combining equity investments with a call strategy, and the fund seeks to generate stable income while offering potential for that capital growth. So it's really more income versus a growth fund. We take a look at the 12-month trailing distribution rate of 10.68% and the SEC 30-day yield of around 0.43%. When we pop underneath the hood to give you a little bit more information exactly what's going on, the Goldman Sachs fund has over $3.8 billion of net assets. So very, very strong there. Now, another positive is the expense ratio is only 0.29%. It's probably one of the lowest expense ratios that I've seen in most of these type of funds. They have 69 million shares outstanding. In the past 12 months, it paid out about $5.33 in total distributions per share. And it has a yield that gives about a 9.66% yield. As I said earlier, it does pay out monthly. Now, this fund came out October 24th of 2023. So we do have some time under its belt to know that this thing has performed over the longer period of time. Now, the fund has been a $44.77 low to a $55 high, $55.35 high. And the funny part is the range that we're dealing with right now is 54.9 to 55.33, respectively, is the daily range. Now, this means we're at almost near the top end, high end of the category. We look at the chart over the year to date, and you can see it's been a steady, slow climber. Even with some drop-offs, it's still always coming back, and did the same thing in April. Had a big drop-off down to that $48 price point and rocketed all the way back up to $55. So it recovered extremely quickly, and we see this a lot with these NASDAQ funds. The growth over the past 12 months, 23.36% growth. So yield, 9.6, which is they're saying they were heavily into the growth side, but they had better, or yield side, but they had better growth this year. Total return, 37.05%. When we take a look at the year to date, which would be January 1st all the way to April 30th, We're seeing growth at about 4.46 and a yield about 3.23%. So fairly well balanced between the two. Total return about 8.19%. So if you take a look at this and say, hey, look at we're 4 months into it, you times that yield by 3, it's going to give us about that 9 to 10%. So right on track to about what we expect to see from this fund. But we could see, if the growth continues like it is, we could see another strong year of growth, basically saying which direction will it go. These numbers can change by the minute as the stock market opens up and runs. These things can change on a regular basis, so always verify your numbers beforehand. When we pop the hood of what are they into? Well, this I'll tell you straight out. Goldman Sachs is really following almost a true Nasdaq portfolio. 52% is in technology, 12.96% in consumer discretionary, 12.63% in consumer services. You look at the chart, I almost tell you exactly where it's at with Nvidia, Apple, Microsoft, Amazon, all being in the basically top 5. You got some Walmart that's come in there. You have Costco's moved in there. Netflix is in there. You can see where their consumer discretionary and consumer services come from. But overall, I think a very well balanced fund. So when we take a look at the income, the dividend chart, you can see fairly smooth, you can almost draw a line to it and almost see it just a steady growth across the board. Of course, you're going to have some dips that we had in that May of 25. Slight dips here at the end of April. But overall, very pleased. Their dividend average is about 44 cents a share. Okay. So we're playing right inside the line of their share category. So about 44 cents. Very nice distribution across the board. So very nice, pleasing number there. You look at the chart, long term, everything's above that 40%, other than that April and May of last year. So right in line with their average. So how did the taxes hold on this thing? That's a big question that's out there with a lot of these funds, especially when we're into retirement. Well, high portion of ordinary income. So like most high mixed yield items, ETFs, GPI is not primarily designed for tax efficiency. It is a drawdown that I have of this particular fund that I'm not real pleased with. The component, the cash generating of selling call options, the premium, is typically classified as short-term capital gains or ordinary income. So the tax rate means you're going to pay your regular tax rates up to 37% on the bulk of your monthly distributions. Now, they do use a higher level of return of capital. Now, this is only potential. It's not guaranteed. They don't always put it out there. But Goldman Sachs' recent tax filings of GPIQ shown that a significant amount of return of capital. So what is that? Well, ROC is actually a tool. It's I call it an accounting type tool. The fund returns a portion of its own investment to you rather than new income. And it's really classifying the distribution. I want to clarify that because I have a great video on this, explains it all, how it actually works. But when it says it's your own investment, that's legal words saying what they're doing is they're saying the capital, the distributions that they're giving you, they're classifying as return of capital, which will reduce your cost of the buying of your shares. So let's take a look at total return since those are the most important numbers. And total return year to date, 8.19%. You can see in the chart that it was bouncing right about that 0% to, I'm going to call it 0 to -2. Okay, so basically it's bouncing between that 0% and -2%, to where it really dropped down to April, down to the below the 6% category. But once they understood what direction we're heading, what's going on, it rocketed right back up to the 8.16. We look at the year to date across the board, it was bouncing right in that mid 25 range, and recovery has gone very, very strong, back up to 37%. So it gives you some ideas of how well it actually has performed. So is this one good for retirement or not? Well, as you know, I always put everything in the classifications. Classifications being foundation, being growth fund, or being designed for income. And this one, I'm telling you, I could play probably both ways. I would actually put this probably more towards my growth side of it, because we've had some decent growth in that 23% range. Income about 9.66. There are some that we have a little bit better income, and that the tax efficiency is not the strongest across the board. So I would put this more in my growth side of it, hold on to it, reinvest the yields on that side of it. The return numbers look decent. So you could build a case for either side, but personally, I'd be on the growth side and drip the yield back into the growth to just continue to grow, and then pull this out and either sell it to buy a higher yielding fund that has a better total return factor based off of income versus growth, or you could turn it into an income side of it. But let me know your thoughts. That's my opinion onto it. I like this fund. I'm heavily invested into this fund. So I want to be upfront and honest with everybody there. I do invest in this fund. I have it in my growth side of it, not my income side of it. But overall, I believe it's a great fund for retirement if you put it in the right position, the right tool, in the right toolbox. Let me know your thoughts below. Leave a comment down below. Tell me how you think of the fund and where you think it fits into it. And best of all, hit that like button if you like what we're doing.
Thank you for watching. Press the